Benjamin Franklin once said, "In this world nothing is certain but death and taxes." That is, death and taxes. Although Quest really can't do much about that whole death thing, the Quest Tax Department strives to decrease the pain of taxation by taxing the correct taxes to our customers and vendors. Any given telecommunication bill can be taxed in excess of 20% when you include federal excise tax, federal universal service fund, 911, state tax, county tax, city and local taxes. This 20% taxation on telecommunications products and services makes telecom one of the highest taxed commodities in the United States. Therefore, customers often scrutinize these taxes to ensure they are not being overtaxed, beyond what is legal anyway. Quest collects and remits taxes at multiple hierarchical levels, including sales and use tax at the state level, the county level, and incorporated municipalities, and various local special purpose districts which can overlap each other, like in the state of Washington, which has a Regional Transit Authority Special Purpose District, or RTA for short, as well as Public Transportation Benefit Areas, or PTBA for short. Let's look at an example where these two special purpose districts overlap each other in a single jurisdiction. To see this better, let's build these data layers one at a time. Here's this area with only the incorporated municipal data layer. Now let's add the RTA, and finally the PTBA. To understand how Quest accounts for these diverse taxing combinations, let's drill down even further. This combination only has the RTA Special Purpose District, whereas just a short distance away within this unincorporated county area, there is an area where there is no RTA tax, but there is PTBA tax. And also nearby is an area within the same unincorporated county that has both RTA and PTBA Special Purpose Districts. So that's conceptually what happens, but how does Quest make these assignments? Quest uses state-of-the-art third-party software combined with information technology expertise to help identify where our customers are located and which taxes are applicable. Let's look at some address examples in unincorporated Snohomish County, Washington, which are within a 3-mile radius of each other. For simplicity's sake, we will only differentiate between the special purpose districts. The first address example is identified as being located outside of both the RTA and the PTBA Special Purpose Districts, and is therefore assigned the TAR code, Tax Area Rate Code, of WA 3180. This TAR code specifies the geography within which all residents share the same unique combination of taxes. The second address example is inside the RTA but outside of the PTBA, and derives a TAR code of WA 3100. The third address example is located within the PTBA but still outside of the RTA boundary, and derives a TAR code of WA 3181. The fourth and last example in Snohomish County is located within both the RTA and the PTBA Special Purpose Districts. This geography derives the TAR code of WA 3131. As you can see from the previous 4 examples, all within 3 miles of each other, telecommunications taxation can be a very complex assignment process. Conceptually, assigning taxes is like plunging a spike into the ground and keeping track of the pierced layers, including county, wire center, RTA, PTBA, and city. Wherever the spike pierces, it assesses the appropriate tax, and then at various time frames, Quest remits these taxes to the specific tax authority. Let's look at the taxation on a $50 business telephone bill at each of these 4 locations. Although the difference is not great, incorrect taxation can result in customer dissatisfaction. In addition, incorrect taxation can also result in fines and penalties. Collecting and remitting correct taxes at the numerous jurisdictional levels is a very complex process. However, through using state-of-the-art technology, Quest is poised to correctly tax even the most complex of taxation scenarios.